US stocks and oil bounce on lower US inflation and another cut in tariffs on China, sending the Aussie and Kiwi dollars up around 1.5% overnight. Lower inflation in India sets a path for a June rate cut, and consumer confidence rises again in Australia. That's coming up in our 5 Things in 5 Minutes on Wednesday, May the 14th. And then in our deep dive interview, ANZ economist Vicky Xiao analyses the US-China trade deal and what to expect next.
Tariffs on steel, aluminium industry, and also automobile industry will be something China and the US could talk about in the second phase. And eventually, we project the final deal will reach by 2026 when US hit its midterm election.
But first, in 5 and 5 with ANZ, US markets bounced overnight as lower than expected inflation and further easing in US-China trade tensions took risk off the table for investors. Renewed risk appetite sent the US dollar down, with the Aussie and Kiwi dollars jumping around 1.5% each. Overnight, the US administration announced it was cutting the de minimis tariff on small parcels from China from 120% to 54%, another step in trade de-escalation. Meanwhile, the US headline and core CPI rose 0.2% in April, lower than expected. ANZ economist in London, Bansi Madhavani, says progress on bringing inflation down has been striking.
What the data are also telling us is that tariffs are yet to reflect in actual consumer prices, broadly speaking. There was some surge in selected prices of goods, but slower rise in services prices offset that. So the message to take away from the data is that if we set aside the concerns of tariff-driven inflation for a moment, disinflation is still very much underway. If we do get trade agreements, which seems to be the path that we're headed on, the impact of tariffs on inflation could be transitory. In that sense, our expectation is that the Fed will be in a position to cut rates in the third quarter. When you look at market pricing, markets are fully priced for a 25 basis point rate cut in September, which aligns with our thinking.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was up 0.9% and the Nasdaq up by 1.8% off the back of a rally in techs. The US dollar index was down 0.75%, the Aussie dollar up 1.6% at 64.76 US cents, while the Kiwi was up 1.5% at 59.4 US cents. Gold up 0.7% at $3,251 US an ounce, while West Texas Intermediate Futures was up 2.8% at $63.35 US a barrel. Number 2, Australian consumer confidence rose for the second week in a row last week to be at its highest level since the Reserve Bank's February rate cut, sitting at 88.3 points. ANZ economist Sophia Ngala says the lift has been led by households' confidence in financial and economic conditions over the next year.
Most notably, household economic confidence over the next year. Looking at it on a 4-week moving average basis, the series is now at its highest level since early March, just before the introduction of US tariffs on aluminium and steel. And that lift in the 12-month outlook that we've seen may also be supported by discussion of a potential 25 basis point rate cut by the RBA at its May meeting, which we also expect.
Number 3, weaker profitability drove reported Australian business conditions down slightly in April, according to NAB's survey. Headline confidence improved but remained negative. ANZ senior economist Adelaide Timbrell says the timing of the survey, 3 weeks after the initial April 2 tariff announcements in the United States, means it missed peak uncertainty, although purchase cost and retail price growth did pick up slightly.
With slightly stronger price growth and no huge dip in confidence, this certainly wouldn't be something that made the Reserve Bank more dovish, though given the rest of the data we've seen, including flat Q1 consumer spending and what we expect to be a pretty unremarkable wage price growth, we still think that a rate cut in May would be the path of least regret for the Reserve Bank.
Number 4. In New Zealand, ANZ's Trachometer Index showed heavy traffic movements rose 2.7% in April to be up 1.7% annually, while light traffic rose slightly to be flat year on year. ANZ New Zealand economist Sharon Zollner says while that indicates consumers and their cars are still doing it tough, the production side of the economy is picking up, led by agriculture.
Now, of course, that sort of rebalancing is exactly what the New Zealand economy needs after the consumption boom that we saw during COVID, which blew out our trade balance, our fiscal balance, our current account deficit. So it is what we need to see. And it is good to see that strength, which is likely to be related to the agriculture sector. But we are thinking things will look better for consumers in the second half of the year. Interest rates have come down a long way and the employment, it's increased 0.1. Can't get too excited about a 0.1% increase, but at least it was back in the black and we are expecting the unemployment rate to be headed headed down by the end of the year.
Number 5. India's headline CPI inflation rate dipped to 3.16% in April, its lowest since July 2019. ANZ economist Diraj Nim says while that supports the Reserve Bank of India's ability to cut rates, an unexpected rise in core inflation to 4.2% throws some uncertainty into the mix.
These trends possibly mean that the rate cuts are imminent. At about 2.8% currently, the real rate is quite restrictive and not in sync with the Reserve Bank of India's accommodative stance. So, of course, we expect a 25 basis point rate cut in June. But the future rate cuts can come into question or at least come under a debate because of the acceleration in core inflation, which has been unexpectedly sharp.
Diraj Nim there. Now, in today's deep dive interview, ANZ economist Vicky Xiao analyses the US-China trade deal, including the prospects for a second round of tariff reductions.
Two main key takeaways from yesterday's trade deal. First is a significant cut on tariff rate from both China and the US. So both countries agreed to cut the tariff rate by 115%. So currently the US tariff on Chinese goods sits 30%. On the other side, China imposed a 10% tariff rate on US imports. So the US tariff on China essentially goes back to the level pre-Liberation Day. And then apart from that, trade deal also include the mutual acknowledge of establishing working mechanism for future trade negotiation. So this is a good sign for the global trade. And then we believe there's going to be more negotiation talk between China and the US for the second phase of the trade deal.
What was it in the end that brought the parties to the negotiating table to get a deal done?
I believe both sides realized that the 3 digits high tariff rates are not going to be sustainable. And then we've seen the economic data this month, the PMI, especially the manufacturing PMI from China, dropped below 50%. And also the direct trade from China to US dropped by 20%. So there are early signs of the economic pain on China's side. So I believe that's a key motivation for China to negotiate a deal with US. From the US side, also the domestic inflation concern is mounting. And also US is going to reach its debt limit around mid-July. So that's probably the key reason push US to the negotiation table.
How do these announcements affect your current forecast for China's GDP growth over the next year? Is there upside now?
So we've downgraded our China GDP forecast in 2025 from 4.8 to 4.2%. The main reason for the downgrade a month ago was due to the tariff impact. Now we've seen the tariff rate come down significantly, and there's going to be more positive news coming up in next few months, hopefully. So definitely our China GDP forecast of 4.2 is subject to an upside risk. But with the announcement from Trump's administration, the policy seems really uncertain. So we cannot rule out further trade tariff escalation between China and the US in the future.
So where to from here? Could there be a phase 2 of a deal? And when do you think that could be struck?
Some key things can be watched in phase 2 negotiation process. First is the fentanyl tariff. Now, the US still imposed 20% fentanyl tariff on Chinese goods. So this could be the next focus point. And also sectorial tariff like the tariffs on steel, aluminum industry, and also automobile industry will be something China and the US could talk about in the second phase. And eventually, we project the final deal will reach by 2026 when US hit its midterm election.
Vicky Zhou there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, May the 14th. Catch you tomorrow with how Australian wage data later today might influence the RBA's rate decision next week. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.